Welcome to the Scale Up Valley podcast, where we bring the best founders, CEOs, and investors to help you scale your business from 1 million to 1 trillion. Today's guest is Mark Drever, the president and CEO of Xcelerate. Mark, welcome to the show.
Thank you, Mike. Thank you for having me.
And Mark has an amazing story. He was able to bootstrap his business during 12 years from 0 to 50 million in revenue, 0 to 400 employees, before getting into a PE-backed journey. And in the last 2 years, Mark was able to grow from 50 to 200 million and 400 to 1,500 employees already with acquisitions as well. So he has a unique blend to, bootstrap, grow organically a company through a long period of time, and also be able to grow the company even more aggressively with private equity, and is able to also help us analyze what he considered when he was considering a potential exit. So I think there are amazing things in this episode that you should stay on the other side of the line, listening to us during the upcoming half an hour, 40 minutes. So Mark, welcome again. Amazing story. It's always a privilege to have entrepreneurs and CEOs like you showing us the way and inspiring us to do better and to move forward. So would you like to just give us an overview about your career, about Xcelerate? What is the company about? And let's start there.
Sure. I'm happy to do it, Mike. And thanks again for your time. I really appreciate it. I know it's valuable, and I'm happy to share my story with fellow
Thank you.
entrepreneurs out there, and hope that this message resonates with some folks and inspires them to go do and chase their life's work and their life's dreams. For me, I started Xcelerate Solutions with a couple local business partners here in town, local entrepreneurs, on September 11th, 2009. And with one goal in mind, really, which was to help make the country safer, to help make the United States safer. We're a U.S.-based company, and that was very important to me. It was very important to me from an early age. The first 12 years of my career, I spent at Coopers and Lybrand, PricewaterhouseCoopers, and IBM. I worked for one company, but we were either bought or acquired during that period of time. And it was some of the best training I could have ever gotten, and more responsibility that I could have ever gotten at a young age, which I think really positioned me well for my entrepreneurial journey, which started on September 11, 2009. And people ask me, well, why'd you pick the date? And, why is that so important to you? And it really comes down to the fact that I come from a long line of service in my family. Both of my grandparents on my mother's side were in World War II in the Army. My grandmother was a nurse. My grandfather was an infantryman. My father was in the Navy during Vietnam. My uncle was in the Air Force during Vietnam. My stepfather was a Marine. My cousin was in the Navy. My other cousin was in the Army. And so just a long line of service. And I just really had an affinity towards the mission and the purpose for which they completed those jobs. They were all enlisted, by the way. I'm the first guy in my family to graduate college, and I really saw the military as a way for me to be able to get college paid for. And I set a goal very early on in life to go to one of the United States military academies, and had that dream lined up pretty well until I was 16. I was involved in a bad accident. I lost the vision in my left eye. And that kind of DQ'd me from being able to go to the United States Naval Academy or any of the other service academies for that matter. Kind of stumbled around a little bit trying to figure out what I wanted to be when I grew up, and landed in the government contracting space as an intern at Coopers and Lybrand back in, I guess it was 1997 or 1998. And I never left. I stayed there at Coopers, PwC, and IBM through all those mergers and acquisitions, and really just positioned myself to be able to go hang my own shingle someday. I was either going to go one of two paths. I was either going to be, as far as I was concerned, I'm not sure what anybody else thought, but as far as I was concerned, I was going to be the next CEO of IBM, or I was going to go start my own company. And so I decided to hang my own shingle, and we were off to the races, and we made great progress very early on in that business. We grew that business from 0 to 6 million in the first year, and then we just kind of kept growing and scaling the business, 30% a year every year for the most part, and got it to about a $50 million business about 12 years into it. And then we decided that we would sell the company or sell a majority of the company. And so we went through a formal process and found a banker who represented us. And then we took it to market and went through a real process, which was pretty amazing to learn new things. And it's one of the most validating things I think that you can ever have happen to you. Is I think all entrepreneurs look in the mirror every morning and whisper sweet nothings to themselves in the mirror, and you tell yourself how much that business is worth, and you think you know how much that business is worth, but you really never know until you take it to the market and the market tells you. So that was one of the most
Right.
validating professional experiences in my career, and I knew we really had something special. I knew that going into it, but when the market tells you, it's a great validation point. So really
Yeah.
excited about that and about all the opportunities that it created for all the folks that helped me get here along the way, because they've all grown with me. And anybody that knows me knows I have a lot of Markisms, which I've usually stolen from somebody else, but and I certainly didn't make this one up. But all boats rise on a rising tide, right? And so I think that the people that have been around me during that period have all gotten an opportunity to also experience that success and in the fruits of their labor as well. So that to me is, at the end of the day, really how I'm going to measure my life is how many people was I able to help and teach and coach and create opportunities for them that didn't exist before they met me.
Yeah. And just picking that last part that you said, I like the way of how you see life, right? This learn, earn, and give back phases. In our pre-call, you told me that you are probably in the middle of the earn to transition to give back, and you are already very involved in helping the next generation, helping people that need your support, and helping specific causes. We will get back to the pod in 1 minute. Let me just tell you that I'm glad to announce that this podcast is sponsored by the web agency WebTech. WebTech are specialists on getting customers to companies. They are booking 250 meetings a month to their own sales team. And their business strategy is to teach other companies what they do for themselves. I'm very excited to announce that I've agreed with Pontus, the CEO of WebTech, a special advantage to our listeners. Our community have now access to a pre-designed suggestion on how your website could be improved, and or free trials for both SEO and digital marketing. Oh, and by the way, we are working with them too, and I'm impressed by the results. You can do the same. You just need to go to trywebtech.com/Mike, trywebtech.com/Mike, and tech is without the H, just TEC, and tell them you are a listener of the show. Now, back to the pod. So that's really great. But maybe let's give a step back, and I don't want to get into those very open questions that don't give a lot of value to the audience. So how did you scale the company? You could stay here for a week
Yeah,
talking, but maybe let's go into a more. I think that that selling process, as you said, it's very eye opening for an entrepreneur. But starting with the differences between managing your own independent business and then leading a PE-backed business as CEO. What were the differences? How did you adjust your role as the CEO of the two companies, right? Which are
yeah,
kind of the same company but different styles and different
it
journeys, right?
is. It is. It's the same company, but the company's scaled at a very different level at this point. And I've yeah, outside, I've always worked for investors effectively. I mean, I either worked for partners at a privately held company at Coopers and Lybrand and PwC, or I worked for a public company and IBM. And so, I mean, those are professional money, but it's not professional PE money. And then when I set out on my entrepreneurial journey with my two other business partners, who gave me a platform and gave me the money to get my business going, and lots of great advice and coaching along the way. You got to be really down and in on your business. I mean, you have to be. I mean, it's just you. When it's just me. They gave me $250,000 to start my business. They gave me some office space, and they gave me some back office support. And they said, go get them, Tiger. And we were able to take that 250,000, by the way, and deliver about $152 million in returns to our shareholders. That was actually including the last transaction. That's not including anything we've delivered since December 23rd, 2022, when I sold the business, or a majority of the business rather. I think that there's just, being an entrepreneur is a grinder business. You have to be able to, not only work the shop floor, but run the shop. You have to be able to do every job in the business. And you gotta be able to, juggle those balls and really, understand where to spend your time. Because time is the one commodity in life you can't get back, right? I'm sure there's a few other commodities you can't get back, but it's one of the commodities you can't get back. And I think the big difference is you don't have the teams you don't have the backing and you don't have the quals that larger firms have. And so, as you grow and scale a business, when we got to 50 million, I started building out a team the entire way. But as we continued to grow, it allowed me to work more on strategy, outreach, customer presence, marketing, all the things that I think go into building, a world-class organization, along with all the infrastructure that's needed and out there. But when you get to a certain point, you hopefully hire a good COO, and you hire good managers to run various divisions or departments of your
Hmm.
business, and you empower them to be successful. But the real difference between working for private money and professional money, is really just the expectation on the returns, and when those returns are going to happen, and when they're due. I mean, the other big difference is, we ran a business with no debt on it effectively after we paid back that first $250,000 note. And when you go into the private equity markets, they're going to put leverage on your business, and so now you have leverage on it, and you start to really focus on EBITDA as opposed to net income. And that's definitely a
Right.
different feel. You got to train yourself to think differently about how you manage and run your business. You have to, I need to do a lot more up and out, a lot more investor relations, fundraising, if
Hmm.
required, management of the board, and making sure that the board understands where the critical investments are needed in the business, and they feel comfortable with that and what the ROI on those investments are going to be. And so it's moving up the stack in terms of sophistication. Private equity guys are big time financial engineers, and they look very hard at the operational side of your business, and they look hard at the numbers, the cash flow, and other things. And they're all about creating, a multiple on invested capital return for their investors, right? It's an MOIC return
Yeah.
is what our private equity group is focused on. And so that's a different way to look at your business. Not quite as patient as a very closely held business, but I'm very fortunate in the partners that I picked, and they picked me, and McNally Capital out of Chicago. They're a family-owned business that's turned into a couple private equity funds. I think we're the eighth or ninth investment that they've made out of that office, and they really are just good people, and they want to see everybody do well, but they also understand that their investors expect above market returns, and so they're very focused on that. But they're also very focused on us making a lot of investment in the business to be able to scale it and grow it, which is really nice. And because they're not pulling money out of the company for distributions, right, outside of taxes, all the money goes back into the business, or it goes to pay down the debt, and we try
Right.
to keep cash up and debt down, as Ward McNally likes to say.
That's awesome. Yeah. So in terms of, let's not go into the initial kind of startup stage or getting into early scale up. Let's already think about over 100 employees. Do you see any kind of thresholds or inflection points from a net count perspective, or a complexity of leading the company from the, let's say, 100 to 500 employees, 500 to 1,000 employees, 1,000 to 1,500 at this stage? That's the number of team members you have on your team. Now, are these kind of CEOs that says, I just need to, the leadership team evolves, but I still have my 5 to 7 direct reports. So the level of those 5, 7 direct reports that make my leadership team, that's the thing that changed. So probably I need to upgrade some of them. Others were able to grow with me as myself, as I needed to transform into the CEO of that large organization. But now you are already almost a mid market, but especially in the services business, almost getting very close to the enterprise business, because we know how hard it is to get into over 1,000 people in the services business, right? And of this in the industry you are in. So, long story short, do you see any inflection points, any thresholds from an to 500, 500 to 1,000, 1,000 to 1,500 that you would suggest other CEOs to take a look to, and how they should prepare to not face a growth plateau?
Yeah, I think there's several inflection points along the way. I think there's an inflection point that happens when you first get started. I think there's an inflection point that happens when you hit 10 or $15 million a year. Probably maybe even $6 million a year. We can make your first strategic hire and bring them in to help you, and then you just keep scaling the business up. And look, the team that got you here isn't necessarily the team that's going to get you there. And people come and people go, and people retire, and new people come in. And I think that I'm always looking to build a leadership team of one more like our best. And I've always brought people in that I think outpunch the weight of the size firm we are. so that we have the capacity and ability to grow, because I do want the team that was here with me to grow with us and to be able to be in this thing for the long run and participate in the fruits of the labor, assuming that they have the capacity to do it. And I think an overwhelming majority of the people that I put into those leadership positions in the either vice president, director, SVP, EVP levels, or C-suite, I think are all people that can really work with us to scale the business and have those backgrounds. In some cases, we've grown some of those internally, and they've learned after working for us for 10 or 12 years, how to grow into those roles. And that's really gratifying too. Staying power in the professional services business, is really tough, because the only thing that you really have to differentiate yourself by, unless you have IP, is the experience you create for your employees and the experience you create for your customers alike. And if you can create a superior experience, everybody's not coin operated and everybody's not going someplace to make more money. I think that, I say this to folks all the time, we can all go someplace and make more money. The question is, are you going to be with the same team? Are they going to have the same core values? Are they going to be aligned with the mission that you want to support? And all those different things, all those other check boxes, which I think go into any smart person making a good career decision, right? Obviously, we all need to feed the family better tomorrow than we did today. At least most of us want to do that. And I don't think that's a bad thing. I think people should be running towards opportunities, not away from opportunities. And so I always encourage everybody that comes into our business, look, I want you walking in the door with a smile on your face. If you or we decide it's time for you to move on, I want you walking out the door with a smile on your face, and I want you to look back and saying that was a wonderful experience that really helped me grow as an individual or as a professional or in the mission space that we operated in. And that's like really, really important to me, because at the end of the day, all you have is your reputation and how you treat people in business and in life.
Right.
And I try to treat people with respect. I try to treat people. I do treat people with respect. I treat people with dignity, and you got to be a good listener. I'm hoping that every management team meeting that I walk into, especially senior leadership meetings, that I'm not the smartest guy in that room, and that everybody in that room is a lot smarter than me. And I know I'm in the right room, and I know I've done my job. And so, I'm kind of a jack of all trades, master of none, so to speak, outside of being a leader and an entrepreneur. And so I've really hired experts around me that really understand the various aspects of the business, and they can do it better than I can. I don't think there's a job in this business that, for the most part, outside of coding, but maybe now with some of the new AI stuff, I could fake it until I make it. But there isn't pretty much any job in the business I can't do that I haven't done before. I started out as a management consultant. I started off as an infrastructure employee in a proposal shop. Then I moved into a strategic consulting role. Then I moved into a process consulting role. Then I went and ran a software integration as a part of bringing it into IBM. I ran a practice area. I ran accounts. I was a client executive. So I mean, in those 12 years, I just had a tremendous amount of experience, and so I felt like there wasn't any job in the factory that I couldn't do, and therefore I felt like I was ready to run the factory, and that's when I decided to start my own business.
Sounds amazing. So let's maybe jump now to something that is a lot of entrepreneurs consider at a certain point, which is, when is the right timing to start considering a potential exit or even a potential partner to help me in the next chapters of this journey of scaling the company, right? So should I consider PE or not? And you said on your introduction that it's very humbling for an entrepreneur to understand what is the real value, what the market tells the business is worth. How has been your experience and your process? When did you start thinking about it? Yeah, if you can walk us through the journey and the decisions you need to make and what you considered in the process of decision making.
Yeah, I think the first question that every entrepreneur needs to ask themselves is, are they building a lifestyle business or are they building an asset-based business? And the difference between a lifestyle business, and there's nothing wrong with either of them, by the way. It's just a matter of what it is that you want. That's the great thing about this country. It's a great thing about free markets. If you've got a good idea and you want to create a lifestyle business, you can create a lifestyle business and it'll be great. And if you've got a great idea and you want to build an asset-based business, you can do that too, and it can be great. And so I'm not saying that either one of these are right or wrong. At the point in my life when I decided my journey that I wanted to build an asset-based business. Nobody in my family ever had any real money. Nobody graduated from college, very blue collar. And I was fortunate enough to grow up in an area where we were the only people that didn't have money. And so I saw it and I was around it. And I was around all these very successful and wealthy business people, politicians, like you name it. It's in McLean, Virginia, right outside Washington, D.C. And so it's a very unique environment. And I was extremely fortunate to have landed there at about the age of 6. And so for me, I decided very early on that I wanted to be an entrepreneur and I wanted to build an asset-based business because I wanted to create generational wealth for my family someday. And I think the only way you can really do that is if you do it thinking with the end in mind, like a good consultant, and starting off with a business plan that demonstrates that, you have a game plan for an exit at the end of the day. It only took me about twice as long as my original plan that I put together. I originally wanted to start the business, grow the business, and sell the business within 5 years. It took us about 12. But I also really, my goal was to get to 150 or 200 employees. We doubled that. And so, I think things happen in business. Like you got to get everything working at the same time. Like in a professional services environment, especially in the national security space, GovCon space, PEs are looking for, what is your backlog? What are your signings? What's your trailing, 12, 24, 36 months revenue? What are the type of capabilities that you deliver? What type of contracts do you have? What type of personnel do you have on those contracts? And so you got to look at all these different things, and getting, in 12 years, we probably had 3 or 4 times, maybe four, three most likely, where all those things were working together, where, it looked pretty good, where we could maximize our enterprise value. And I was very fortunate because the two partners that I had successfully built and exited a few firms before Xcelerate. And they were great coaches and mentors along the way. Their names were Michael Berkman and Lewis Waters, just fantastic, amazing people. Unfortunately, Lewis passed away literally a year ago on Sunday. And my other business partner, Michael's still here, is a friend, a mentor, and an investor in the business, but he's no longer active in the business. But, having those mentors that can tell you, I must have gone to them 25 times and said, all right, boys, now's the time. Let's do it. Let's go. Let's take this thing to market. And they're like, slow down, young Skywalker. Not yet. We're not ready yet. You got to get these other things done before we do that, before we can maximize value. And so, that's frustrating at times because, you think you want the outcome that you want, but, sometimes you got to slow down before you can speed up. And that's what we did on multiple occasions. And it all came together. And, the crazy thing is our business took a massive hit 2 years before we sold, right around the COVID time. Some of it was related to COVID, some of it wasn't. And that really springboarded us. I think just we all got together, put a plan in place, and we bounced back, and we hit the trampoline and doubled the size of the business in a year. And so those types of moments in business are when you really need to capitalize. You always want to go out on top. You always want to go out when you're winning a lot, and when you've had kind of your best trailing 12 months, because that's how you're going to be measured by most companies that are looking at it. Most companies aren't buying your business on a forward look, where most kind of people who haven't gone through a sales process before don't understand that. They're like, well, my business is worth this because I have this pipeline and it's going to do this. I'm like, that's not how these companies buy things. They buy things on trailing 12 months, and they are buying the confidence that they can run into that upside on that deal, and they can make arbitrage on it, right? They want to buy you for a number lower than they're going to sell you for. And that's really how it all works. That especially in the private equity markets, strategics will buy you for various reasons. They'll buy you to take out market share. They'll buy you because they want to get into a new client base. They'll buy you because the public markets might be trading at 18, 19, or 20 times if you look at Accenture stock, right? And they could buy a company like us for 10, 12, 13 times. So immediately, right, there's enterprise value for them the minute that they buy us, because the minute we fold into their 18, 19, 20 time business, whatever it might be, they get the benefit of that arbitrage. And so, you have to look at these things in two different ways. I think that you should, your business will perform exactly the way it's designed, and you should understand who your target markets are. I started meeting with an investment banker literally before I started my business to understand what is it that people were out there buying in the space that I was working in. And then I built a business plan that I felt was achievable based on those market trends and conditions, based on my relationships, and based on the capabilities that we were bringing to bear. And then I went and I worked that plan every day. And I worked it every day for 12 years. And we got a tremendous outcome by anybody's standard, given what we started the business for and what we created in terms of shareholder value. And we're not done yet. Our business now is dramatically bigger than it was before. We do have a bunch of debt on it, but the debt's going down every day as we're paying it off. And there's actually additional equity that was put into the business as a part of the transactions we've done. And so the dynamics are different, and you just you got to learn kind of a new vocabulary, and you got to learn what motivates different sellers, and different buyers. And so understanding what that universe of buyer looks like, I think, is a really important thing for entrepreneurs to understand if they're going to build an asset-based business that they want to sell. If they want to build a lifestyle business that they just want to run out until the end of time, and when they get tired of doing it or the market changes, they just kind of put a bow on it and let it sail off into the sunset, or they turn it over to their kids or whatever it might be, that's perfectly fine too. There's nothing wrong with that. Maybe a future business that I have will be a lifestyle business as opposed to an asset-based business, because I just really enjoy what I'm doing and I like the cash flow that it's spitting off. But I don't want to do all the hard work that's required to build all those other capabilities inside the business that really a buyer's looking for that as an individual owner, I might not really care nearly as much about.
Very interesting points. But sometimes the effort that it is required to build a lifestyle business is the same that is required to build an asset-based business. So it might not
Sometimes
be
it is. Sometimes it
a
is. Yeah.
bad idea to consider to build an asset-based business. Yeah.
Yeah, that's my suggestion. But again, I don't want to discourage, entrepreneurs from being entrepreneurs
Right.
because, they're like, look, I don't want to build it to sell. I just want to build it to live. That's okay.
Yeah.
Right. It really is
Yeah.
at the end of the day. And in some cases, yes, it is just as hard, but you also, you're able to do things that you wouldn't otherwise do. I'll give you an example. My business partner, Michael Berkman, one of the most disciplined businessmen I've ever met in my life, sat me down very early. He's like, okay, Mark, here's the deal. We're building an asset. We've all agreed on that. And so we're going to run our business like a business. We're going to make money in this business. We'll distribute money when we can distribute money. And then you do what you want with your money. But we're not running country clubs and cars and houses and all other those types of things through our business and making our books, having
Right.
somebody come in and need a decipher code to figure out what's what when we go to sell this business. That's one reason why you want to, if you build an asset business, you want to run a really clean business. Because when you go to sell your business, if you have a really clean business, it's much easier to sell than if you got a lot of hair on the dog. And there's just, well, what was this $500,000 expense, or what was this $1 million purchase, and what about these 15 family members that are on your payroll who aren't really working in the business every day? So that's the difference between a lifestyle business and an asset business, where I feel like an asset-based business, you're running your business like a real business. You're making money, you're distributing the money as appropriate, or putting it back into the business. And then when it comes to time to sell, things are a lot easier, but you're paying for that up front. You're not necessarily enjoying the fruits of your labor out of the gate. You're not running a bunch of personal expenses through your business. You're keeping business, and you're keeping personal. And so just a wonderful lesson that my partner taught me. So I think I'd have a pretty difficult time ever running a lifestyle business, just based on the discipline that I've learned how to run my businesses in and with, rather. But who knows? Never say never. As I get back into the next phase of my life, or as I transition into the next phase of my life over the next 10 years here, it'll be in the give back phase, and maybe that'll make a lot of sense.
Yeah. There's something interesting, and there are pros and cons of kind of going to sell into a strategic or to a PE investor. As you said, potentially, if you find the right strategic, you will get even a higher multiple, a higher enterprise value. At the same time, we know it's very difficult to be acquired by those strategics and stay as the CEO of the business. Sometimes the same can happen with PE, but in this case, when PE believes in you as potentially the leader of the platform company, and that in this case, it seems clear that Xcelerate is the company that they believe can create a platform company and create that arbitrage and that multiple conglomerate that they can value and exit, then it also allows you to keep doing what you love. And if you go into a strategic, potentially you get into a corporate organization where you'll be a little bit more limited, potentially also opportunities of growth, but at the same time, it can be slower. PE keeps being not as fast as VC, but also very aggressive from a growth perspective, more aggressive certainly than an organic normal growth business. But did you consider both? Did you decide on the PE side because, as you said, you love to be the CEO and you love this journey, you love your company, and you like to still keep scaling it after selling the major share of the business to PE?
Yeah, it's very interesting because my business partners had gone through a couple failed deals with PEs just in terms of a sale of their other business, and so I'd gotten a lot of horror stories from that, and I'd talked to some other people that didn't have some great examples, but yet I also really admired several of these PEs who've come into this space and just done tremendous things. You look at the Arlington Capitals or the Veritases of the world in our space, or even Carlisle, and you look at what they've done, and it's pretty extraordinary. And so there was an intriguing side of PE to me, but I was pretty much deathly afraid of them just based on the war stories I had heard from my partners going into the transaction process. And then we sat down with the bankers, and the bankers were like, look, the market's changed since, we've been talking to you guys for 12 years about this, but the market's changed in the last 12 years. Right now, 75% of all buyers in the GovCon services space are private equity. And that's a huge transition over the last 5 years. It used to be, it was 25% 10 years ago were PEs, and now it's 75, right? So I was really hopeful that I'd sell to a strategic. I used to work for a strategic. I knew that I could drop right back into a big firm, take on a senior leadership position there, maybe be another CEO at some point. One of the strategics that we were talking to during our process, by the way, wanted me to be their succession plan. We had both. We had but originally, I think we had initial 21 offers of interest on our business at one point. I think a couple of them dropped out. I think it came down to 18 was the final number. And then, we ran a horse race. It was an auction process. And so we had a
Amazing.
number of strategics. We had a number of PEs. The strategics were definitely the higher priced in the deal. But at the end of the day, I think the strategics are really looking for more technology enabled solutions or more technology in their businesses. And we didn't have a ton of that. We had like 25% of that as our business, not 50 or 75% of our business. And so most of those strategics dropped off. The one that wanted me to become the CEO dropped off because they had another deal in the pipeline that they had already put an LOI on, and that deal came to fruition before our deal was going to close, and they couldn't do both. And so they picked the one that was a better fit for them. That CEO is still the CEO there, by the way. They never swapped that guy out from the person that wanted me to be their succession plan. So yeah, it was a really interesting process. And what I learned as I got through it was there was another very serious strategic involved with us who was the highest price. And they came back to us with a plan that basically was just going to split our business up, roll the different divisions of our company and divisions of their company. Leadership team would be gone, brand would be gone, all those things would be gone. And it didn't feel very good to me. And this was my life's work, and I didn't really feel good about that. That being said,
Right.
my job is to maximize shareholder value as the CEO of the business. I was a minority shareholder in that business. Michael Berkman and his family were the majority. I owned about 30% and then had a deal where I had up to 40% of that business. It didn't really matter what I wanted at the end of the day. I mean, I take my job as a CEO and a fiduciary very, very seriously. And whether it's a good deal for me didn't really matter. I had a ethical and moral obligation to do the best deal for the shareholders. And those are my partners. And, I think they did get a better deal than me up front. I got a better deal in the long run because I rolled a lot more money forward, but they didn't necessarily want their money on a go forward basis. And so, that was a tough pill to swallow, after I'd been the operator working in the business all day, every day. And my investors were advisors and board members, but hadn't been working in the business. But yet I had to roll a significant portion of my money back in, and they didn't have to roll nearly as much. That didn't feel very good at first. It feels pretty good now, by the way, that we've 3x this business effectively in 24 months. So I feel pretty good about that investment that I made, and I think they wish they'd
That's
put a little
awesome.
bit more in. But we started that company as very, very close friends. We remained extraordinarily close friends and closer friends through the 12 years. They're the best business partners I could have ever asked for. I have zero regrets with the deal I cut. It all worked out the way it was supposed to. Everybody honored their agreements. And that's really the way it is with McNally right now. And so I think I've been extraordinarily fortunate in picking great business partners. I guess better than picking my wives, because I got divorced. So I haven't been divorced in business yet, but I did get divorced personally. So a funny note. Yeah, and I say that tongue in cheek with picking your business partners is as important, or if not more important, than picking your spouse. Getting a divorce, whether it's in family court or getting a business divorce, are very difficult. It's really easy to it's really easy to get married at the altar, whether it's business or personal. It's very difficult to get divorced, whether it's business or personal. And so be very wise in picking those partners on both sides of your life, and make sure that you have the right terms and conditions put into your agreements so that you can make sure that you're covered. But that's really there only if you ever have to go to it. Never once did my partners and I go to the operating agreement because of a disagreement. We always had an agreement that we would come together, we would make decisions, and they would give me advice, and I was the decision maker, and I could take their advice or leave it. If they gave me advice and I didn't take it and it went another way, it was pretty uncomfortable conversations. But at the end of the day, they gave me the freedom to manage the business, and so yeah, no regrets there at all. And it's been a wonderful journey. So I would just be really cautious and careful about picking your partners, and make sure you write a good agreement, and make sure that you don't have a lot of back doors in there where if it doesn't work out, the divorce gets ugly.
Right. Very good, wise business and life advice here. You talked something about that you need to reinvest a lot of the, let's say, exit money on the percentage of your ownership of the business into, let's say, into the new platform business that you are building. But I think that that's also part of the game that professional investors, especially TNP in this case, we are talking about professional services. Of course, it's much more PEs who invest in this kind of businesses, not VC. VC, as you said, they want to see much more tech, very IP intensive kind of businesses. They also want you to have skin in the game. So they don't want you to be too complacent. and they want you to stay committed. And one of the ways of them making sure that you stay committed as the CEO is to make sure that you have a lot of your money there and that you have the best interest to keep driving the business in the best way you can. Do you agree with this statement in terms of the model of PE? Or
Yeah, no, look, they've got me exactly where they want me, and they've got most CEOs exactly where they want them. They want you levered up, they want you hungry, and they want you excited to go get the second bite of the apple. I most certainly, assuming we don't have anything catastrophic here, will make significantly more on the second bite of the apple than I did on the first because I invested heavily in the business, and so I think that's really the way. I mean, that was what the brokers told me. That was what the PEs told me. They gave me use cases and business cases for how these things had happened. And then, of course, I went out and talked to my friends who were CEOs of PE-backed companies who had successful exits and got their take on it. And so everybody that knows me knows that I'm a very high intensity guy in general, and and I'm a risk taker. But what a lot of people don't know about me is I'm an extraordinarily calculated risk taker, and I'm actually very conservative with the investments that I make and the people that I do business with. So I may like an idea, and I enjoy betting on people. I enjoy betting on people that have good ideas. And for me, there's integrity in that. It's very different than just investing in a fund. It's very different than investing in the stock market. It's personal, and I feel like I have a unique capability to help some of these younger entrepreneurs or new entrepreneurs. In some cases, they're older than me. But this is their first
right.
entrepreneurial journey. And given the fact I've been doing this for the last 15 or so years from an entrepreneur perspective, I feel like I'm uniquely qualified to help them. And I do. I help a lot of them, just cut through
That's
the
awesome.
BS, all the things that entrepreneurs waste just the first year of being an entrepreneur on, putting together employee handbooks, sample financial statements, those types of things these aren't trade secrets, right? I give them to people. I'm like, here, just use our stuff. Spent hundreds of thousands of dollars building this stuff. So why
Right.
reinvent the wheel? Give yourself a head start. And that's just good karma, right? I think that if you always do the
Right.
right thing, it's one of the core values of our business, by the way. If you live your life by always doing the right thing, those things come back at you, and good things happen to good people. Bad things happen to good people too. But I like to focus
Nice.
on the good things that happen to good people.
Yeah.
And so I just feel like that's kind of my social responsibility as a successful entrepreneur, is to bring the next generation of entrepreneurs up. And it doesn't mean that they need to be younger than you. It's just the next generation of entrepreneurs.
That's amazing. So, and we are very close to wrap up the show, Mark. Amazing story. We could stay here for hours, and you are always welcome to come back to keep sharing your story. But I'd like to end with a provocative kind of view about remote work.
Oh yeah,
What do you
that's
think about
one of
remote
my
work?
favorite subjects. Outside of making sure that everybody voted today. By the way, I don't care who you voted for, but I hope everybody voted today. If you live in America and you have the right to vote, I think it's one of the most sacred rights that we have in this country. Get out there and vote. I'm sure this is going
Yeah.
to show today, but hopefully people are doing that.
Yes, we are recording on the 5th of November. This will go live in the last week of November.
Okay.
So, yeah.
So I hope everybody did get out and vote. So, and I guess tomorrow we'll find out well, maybe not tomorrow. Maybe we'll know in a month or so, the outcome of the election. Just in terms of coming back to work, business is a team sport. And, you can be geographically dispersed and centrally managed. By the way, we did that at IBM for years. IBM still does it. Lots of huge corporations do it. But there's something that's innate, I think, in the highest performing teams, and it's called in-person, face-to-face teamwork. And everybody knows that the number one rule in any team sport is you have to show up. And I like to use a lot of sports analogies in talking to various folks that I either work with or around. And I tell people, well, if you played sport in high school, you played soccer or you played football, and you went off to college. By the way, you were successful and you got a scholarship to college, and they sent you your package and they said, hey, congratulations, you've made the team. And by the way, here's all your workouts. Go do all your workouts and do them on your own. And then we're going to show up, and on the first day, we're going to go play our first game. And you're going to play against a team, by the way, who's been practicing together face to face for the past 4 months. So my question for you is, who's going to perform better, generally speaking? The sure money bet, by the way, is the team that's been playing together for all those times. Now, if you take a sixth grade team and you fly in players from the European Football League, and they're all used to traveling around and playing on a lot of different teams, and you can put them on a team, and I'm sure they'd whoop up on the sixth grade team. But if you take two teams of similar talent that are in the same skill level, so to speak, the one who's been practicing together for a longer period of time, 9 out of 9 or 10 out of 10 times, they're going to win. And that's just, you don't understand the personal human interaction. You don't understand how to read body language. You don't build the personal relationships. You don't necessarily build the loyalty and trust that you can in person. And while we've, Mike, you and I have developed a nice relationship over the
Absolutely.
Ethernet here, internet, the old interweb, I can promise you that if we were in person, we'd have a stronger connection. So
Right.
I think that COVID and all these other things that happened
And we will
have
be
forced
someday. So yeah.
have forced a lot of people to work from home. They've gotten comfortable working from home in their PJs, and especially for young people, my advice to you is you are never going to go anywhere in your career if you think working at home from your parents' basement in your PJs is the way to do it. So that's my public service announcement for the young professionals that are out there. If you are 5 to 10 years of experience, by the way, and you're trying to get to the next level of your career and you're working from home and you're stuck, I would encourage you to get into the office, go meet the leaders, make yourself known, make yourself indispensable to them, and they will give you more responsibilities and they'll give you other things to do. So much of it is just being around and showing up. And I think that's just true in any team sport. And I think business and entrepreneurship is the ultimate team sport.
What a great way of wrapping up the show before going to our favorite question, which is, if you would have the opportunity to have a coffee with Mark 14 years ago, what advice would you offer to your younger self?
It's probably a lot of the advice that I've implemented today already, that I've learned along the way. Yeah. Number one is probably don't let what I want to say get in the way of what I want to accomplish. It's probably one of the greatest quotes.
Wow.
Show up early and often and stay late. I can't tell you how many opportunities and jobs I've gotten from hanging around, in the office, either being there first thing when the boss comes in or being there at night when he needs something and being dependable and counting on them. The other thing I would tell you is, don't be so focused on your career that you neglect other things in your life. Because I certainly believe that, my first marriage was as a result of my obsession with work and business, and I didn't pay enough attention at home. And so, that's probably the one that hits hardest to me that, I wish somebody had told me. I don't think I would have done it. I think that I was probably too stubborn and too just, tunnel vision on my goal, because I'm just an extremely goal-oriented person. But those are the pieces of advice that I would have given myself.
That's great candor. I appreciate you sharing that, Mark, and being personal about your own experience. Thank you so much for making the time. It was really a pleasure to host you. We wish you all the best, and you are always welcome to come back to share with the community your.
Well, thanks so much, Mike, and I'm happy to do it. So anytime you want to have me back, just reach out. And these are hours well spent in my own mind. And again, anything I can do to encourage others to go chase their dream, be fearless, and be a heat-seeking missile, I'm all about it. So let's go make it happen. I'll talk to you later,
Thank you very
buddy.
much. And to our community, thanks for being there. And we keep bringing you the best of the best to help you scale your business. See you soon and keep scaling.